Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday, and this is the 6th of February, 2018, and what a wild time this is. Up 800 points in the Dow. My mother's not going to have to move back with me. I'm laughing because I was doing TV interviews. Yesterday she calls me up. Of course, she's been in the market this whole rise. And yes, she's in her 90s and she lives in a home with all these people. And they're all these ladies with their walkers. They push, they look at the market and they go, oh my, what are we going to do? Of course, they don't count that they've been making all this money and that the markets have set back a little bit. Well, today, I heard from her very quickly, and she said, thank God I don't have to move in with you. What can you say? But I think it's important that you get an understanding in these markets where we're at. Now, I want to take you to this chart. This is called a price count, and the chart we're looking at is the E-mini S&P. The setup occurred right here. And that's why you have the two green numbers. From there, you got a first price count, which was hit right away. The first counts have the highest probability of being hit. As you keep going down the ladder, they get into substantially less probabilities. It is very rare you hit a fourth price count. Yes, it can be hit, but it's very, very rare. It's almost like me telling you you're going to go 9 days over or under a Bollinger Band. The third count is often where you should be changing your strategy. What do I mean by that? Let's assume you were in futures and you get down to a third count and you get a bounce. Well, if you still feel that fourth count is alive, you'd be so much better off changing yourself out of a future strategy into an option strategy if you're going to play for that. Give up some points, but cut down your risk. So I'm just viewing this as the whipsaw area right now. Now, when we come to the Dow, it's the same thing. This was your price count. I put this, by the way, my people that have gotten my research. In other words, if you're on my research list, you got this yesterday. And yesterday you didn't get the bounce in the market. All I could tell you was the third count was right here. You're in that zone. You can see you extended and came right back above that zone. That's what it means. It's a zone. And you hit the zones where you had to be for the market to get even more volatile, and that's what's going on. Let's take a look at the S&P. You can afford to fall back here and hit this 18-week moving average of closes, something you really haven't done until you were about here in July, and then after that, you didn't quite hit it here. You have to go all the way back to the president's election night, right back here. So you've got a situation where you're in a pullback, and that's the difference. Maybe the market's changing its characteristic. When you and I just take a look at a chart without any of the price counts, this is where the price count was set. And that bounce is what set the market up. Now, yes, we have all the software for you to do this. And if you go to our website and you sign up for the price count information, you can do this and work with our charting software to get that set up. But this was pretty much a vertical price decline that wiped out the gains for the year and gave some back today. The market did go up 3.32%. Yesterday's decline was down 5.4%. Let's count that. 5.4, 2.33, so that's 7.7. Day before, let's call it 7.8. That didn't do anything, and you were down 1. It's about 8%. When you add in today's big break to the low, you got down intraday beyond 10%. Okay, so we're in a correction. That is the definition of a Dow theory correction, and you're there. Do I expect this area to be taken out right now? No. Could it be? Of course. But do I expect it? No, not out of this chart probability. When we look at the swing line, you got the higher high, the lower low. When you hit the 100-day average, and yesterday you closed under it, remember what I teach you here. often, when you hit that 100-day average, the first time hitting it, you can slide through it a little bit, but so often it just comes back to bite you. And that's what happened today. The market whipped back off of that and came back over it. Okay, we know that another level of resistance is back here at 27.98 1/4. When I look at the Bollinger Bands, let's take a look. Yesterday you closed sharply out of the Bollinger Band under the 100-day. The odds favor what? That 95% of the time you close within the Bollinger Bands. It's exactly what the market did today. Managed to climb right back into it. Interesting day. When you look at momentum, you have an oversold market that's beginning a correction. In other words, you're getting your bounce already in the market. When we go to the NASDAQ, let's go to yesterday, the same thing. You got under the Bollinger Band. You hadn't hit the 100-day average. You came down today, hit it, and climbed right back in. Where do you think the resistance is? I'm going to say 68.42. Yes, the risk in these type of markets gets large because you're not wrong unless the market gets back over 69.91, because this market, unlike the S&P, has the pattern of lower highs and lower lows. It's very much in the bear camp. We go to the Dow, and let's look at yesterday. The market gets down, gets right here, closes under the 100-day average, under the lower Bollinger Band in oversold condition. Today you get the whipsaw back up right into the Bollinger Band. You know what I'm going to tell you? I think the trade is looking at this market and might be willing sellers in the 25.88 area with stops over 26.310. So, still big risks. I mean, doesn't look like a lot. That's 500 points, you know. It's big money any way you want to cut it. That is not a little bit of money, even though those prices don't look far apart. When we take a look at the Russell, let's go back and look at this one. Under both the 100-day average, the lower Bollinger Band, oversold, comes back today. The settlement price is over the lower Bollinger Band. So all the markets got back within their Bollinger Bands, but because of the math, they're going to still force all of those lower numbers down. In the VIX, we got up to 50. 50. Can you believe that? Remember what I said? This base was big. I didn't know if the market was going up or down, but once it really started back here, we started defining it that the market was moving out, and that I kept pushing here and telling you, I think the 9 area is going to prove to be the bottom of this for the meanwhile. I certainly didn't see 50 coming in the market. It got up this day, Wednesday, closed at the upper Bollinger Band, still pushing it out, still an overbought market. Market backed off a little bit on Thursday. This is Friday. The market starts back over it, so it's pushing that band. That's what I definitely know. The trend is clearly to the upside. Gets up, and today, a peak of sorts made in the market. Now you got 2 days over the upper Bollinger Band. Momentum is turning down. The odds favor a 3% chance for my rule of thumb. If you have 5% of the time you close over and under a Bollinger Band, because I have 2 consecutive days over, I take 2 percentage points from that 3. Admittedly, it's not scientific. Admittedly, it's my rule of thumb. Go back and take a look at it. I think you'll find it interesting. In TLT, we still have a market that's got what? An oversold condition. Look at the number. It's 21. If we go back to the day before, if I can get it to do that, come on. Let's see if I don't think it's, well, I'm going to come off of that, and maybe if I come back. There we go. Day before, both numbers are under 20. Under 20, under 20. So we know we have an embedded reading. When you lose the embedded reading the way you just did today, the odds are that unless it re-embeds tomorrow, price and the 18-day average are likely to make a run at each other. And that's what I'd be looking for here. T-bonds lost the embedded reading. Again, if it's going to rally, I'm looking for price in the 18-day average to try to make a run. But keep in the back of your mind that when a market loses the embedded reading, the first thing that happens is it switches out of that bearish locked-in momentum and it goes to an oversold condition. And that's what you have right now. 10-year notes did the same. But look at this, the interesting thing here. This is yesterday, outside day up. If you lose the embedded reading, all I'm looking for is that right there. And you hit it, and you obviously couldn't hold it, but you also at the same time took out 122.14. So now I've got a pattern of a higher high and a lower low. No trend now in the market left. Dollar index, when you lost the embedded reading, and we talked about that right over here, that's where it lost it. I was now looking for price in the 18-day average to come together. Market moved up yesterday, and today you tell me where that market went to and where it stalled out. You're in a neutral position right now. Nothing new that I can see there. Flip-flop to the euro. You lost the embedded reading, actually way back here, believe it or not. And from there, I was looking for price in the 18-day average to come together. I don't care if the trend stays up. Remember, now you're overbought. Will you re-embed? That becomes the question, and the answer is you don't. So that keeps this area, when you lost the embedded reading, still the focal point for me at least. That's what I teach. And here's your 18-day average. Now I'm neutral in the market again. In the British pound, when you lost your embedded reading, literally right here, it set up that price in the 18-day average had a super shot at getting at each other. If it doesn't re-embed right away to negate that, which it did not, the odds strongly favor. We're coming from there, and it'll be a combination of maybe the moving average coming up and price coming down. And as you can see, it all happened today, and you even followed through. But now you have a downtrend. So now you got lower highs, lower lows under the 18-day average, momentum pointing down. This market entered a downtrend phase. The Japanese yen, well, it's still void of trend. You've got the higher high, the lower low, and you're just sort of flattened momentum. Don't know what to do with that. Bitcoin got under today $6,000 right here. And yes, it came back dramatically. I mean, you know, people talk about it. It gained back a third of its value. It's big. From 6,000 to 7,800 divided. It's maybe I'm wrong on that. Maybe. No, I'm not. I'm pretty close. 3 times 18 is 54. So I'm going to be pretty close that it gained back from its low point a third of its value and added to that. Crazy market. Who knows what you want to do. As I said yesterday, I am concerned in the crude that down here in this 350 area, that might be as close as you get. I was trying to do the math on how much it costs to send oil from the U.S. to Asia, and I keep coming up at about $3. So we'll see if I'm right or wrong there. I wish somebody knew. If they could tell me, write it out, you know, if you're watching me on YouTube, I'd love to know that. Lower highs, lower lows, bearish. We had numbers today that came out for the API numbers. It was a net build of just around 2.5 million barrels. The word is net. I add together the distillates, the gasoline, and the crude. And so that's adding pressure. This market, I still see aggressive sellers around the 6,900 level, but you're oversold now. So no matter how you look at it and think, when you're oversold and you're bearish, it's a warning sign to you. Maybe it's not the place to be. When you reopen tonight, you're probably oversold in the WTI. You got a 33 reading now. If the market's steadied and lower, those numbers will likely drop. I'm looking for 62.74 on the downside. Rebob gasoline already at the lower Bollinger Band and under it. What are the odds of staying under it? 5% of the time. Now, do pay attention because you've gone somewhat sideways here. There's a better bear case in this market than a bull case, and if this gives ground, the 100-day average picks up. But, for new positions, you are oversold. Natural gas, you went from the upper Bollinger Band to the lower. Wow. And you're getting a bounce from there. That's about all that I could say on it. I want to remind you all, Linn Associates, we write on all these different markets, and we write for commodity traders. We're not writing this for if you're trading your ETFs, I'm sorry. We're not writing this if you're trading stocks off of what you think commodities might do. We're writing this for commodity guys. And we're heavy on the option strategies in here and a lot of technical analysis. But let's assume you want those fundamentals and you can't find them. I'm raising my hand. That is what our people are really superior at too. Remember, the firm here runs a pretty good-sized hedging business, so they know the fundamentals that they're talking with, be it the ethanol markets right through the meat markets. So if you'd like to see what our clients get, and this is the people that trade through us, we'd like to show it to you. Why not get a 2-week trial? You got nothing to lose. Give us a call. Go to our website. We really watch what we're giving you for a period of time. You can click up here if you're watching me on YouTube. That'll take you where you have to be, or underneath us on many sites it says click here for Ira's free information. I'm Ira Epstein. You have yourself a good evening. I'll see you tomorrow.